Were you all ready to buy a house and then interest rates went way up? I'm sure you're very discouraged. But what if I could tell you that there are ways to get a lower interest rate even today? In this video, I'm going to talk you through 3 ways that you can lower your interest rate if you buy a house today. Hi, my name's Allesen Cann. I'm a real estate agent here in beautiful San Diego. Before we get started, I would super appreciate it if you would subscribe to my channel and click the little bell also so that you get notified when I put out new content. Before we get started, I would super appreciate it if you would subscribe to my channel and click that little bell also so that you get notified when I put out new content. And if this video is at all helpful, please give it a thumbs up. That way more people like you can see it as well. So the first option we have for how to get a lower interest rate is what's called an ARM. This is an adjustable rate mortgage. What this means is that you're going to have one interest rate for a certain period of time, and then your interest rate will go up to whatever the rate is that you get approved at for the remainder of your loan. So for example, if you have a 7-year ARM, that means you'll have a lower interest rate for the first 7 years. And then in year 8 to 30, you're going to have, whatever the going rate is today, 7% or whatever that is. Now, the great thing about that is that you have time to refinance later. So over 7 years, if you can find a 7-year adjustable rate mortgage, home prices are probably going to go up. That's just what they do. And interest rates are probably going to come down. So even in just a couple of years, you might be able to refinance out of that mortgage and get a fixed rate 30-year mortgage at a lower interest rate at that point. That is option number 1. Option number 2 is that you can actually buy down your interest rate. So if you've ever heard of points, points are basically you paying the lender to lower your interest rate. 1 point is 1/4 of a percentage point. So in order to go from say 7% to 6%, you would need to buy 4 points. Now 1 point is 1% of the purchase price of your home. So this can get very pricey very quickly, but it can help. Even if you could go down 1/2 point, it could be very helpful. If you can afford that, awesome. If you can't, in the market that we are currently in, we are actually negotiating for sellers to pay to help buy down interest rates. So, if you're buying a $500,000 or $600,000 house, even 4 points could be like $24,000. That might totally be something that could be negotiated with the seller so that they pay for it and then you have a lower payment going forward. That is option number 2. The third option is what is called a 2-1 buy down. So this is a new thing that gives you the ability to have an interest rate that is 2 points lower than current rates for the first year, 1 point lower for the second year, and then it goes to the current rate after that. So what that means is, say you get approved for your loan today, interest rates are 7%, and you do a 2-1 buy down. That means for the first year of your mortgage, your interest rate will be 5%. The second year, it will be 6%. And then year 3 and onward, it will be 7%. Now, what we're banking on here is that within the next 2 to 3 years, interest rates are going to go back down, because what's probably going to happen is the Fed's going to, put on the brakes a little too hard. We're going to go into a recession, and then they're going to have to lower rates to get the economy going again. This is just what we do. So when rates drop, you refinance at that point, and there you go. The risk on this one is that if prices don't go up and then you have trouble refinancing, really, as long as they stay stable, that shouldn't be an issue. But if they go down, that could be an issue. You might have trouble refinancing. So maybe then you have to wait a couple extra years. Then you need to be able to really be comfortable with that payment at that 7% interest rate. And that is what you will actually qualify on. So that would be the risk. I don't really feel like there's a ton of risk that the interest rates won't go down. I feel like they're going to go down. The 4 to 5 range is probably where we're gonna, feel a little more normal. Although I will say that historically 7 to 8% is actually the average. So we're really not that high right now, but I know it feels like that. A 2-1 buy down can be an awesome option. And basically what you're doing is you're paying the seller for the interest that they are missing out on for those first 2 years. So there's an actual, dollar amount that they will give you. And again, what we're doing is we are negotiating with the sellers to pay that instead of you. And that way you have a lower interest rate for the first 2 years, and it's a little easier until you can refinance. Maybe you're gonna get another job in another year, you're gonna get a promotion, finances are gonna go up so you can afford that. Obviously, this is one that you really need to make sure that you're comfortable with those changes, stepping up over the couple of years, because if for some reason you get stuck with that whole payment at 7%, you need to be able to pay that. The way people got in trouble during the Great Recession is they were doing ARMs, so adjustable rate mortgages, but they were only for like 1 or 2 years. So what they would do is be like, oh, well, I'll just refinance in 1 or 2 years, prices are going to go up. Well, they didn't. They just dropped drastically. So suddenly they're in an adjustable rate mortgage that they can't afford their payment at all. And that's when you get foreclosed on and all of that. So now you actually get approved at that higher rate, which is good. You don't get approved at the lower rate. So we know you can pay for it. The question is are you comfortable paying for it? Remember, we don't ever want you to be house poor. Being house poor sucks, so just don't do that. So make sure you're comfortable with that. Understand the risks. And if you feel comfortable with it, this could be a really great option. The other 4th option that you might not think is really an option, but it is there, is that you can just buy a house at the current rate and refinance when rates go down. And what that does is you're gonna have the highest payment now for the next couple of years, and then you'll refinance when things drop down to 5 again, and you'll have a lower payment for the rest of forever. So if you're comfortable with that higher payment now, that could be another option. There's also options to do combinations of these things. So just know that there are options out there. We can work really hard to get you a lower interest rate and try and mitigate some of the challenges around that. There are also options for what's called a lock-in shop. So, and you can do this, you can lock in an interest rate for 90 days and you'll have it as long as you buy a house within those 90 days, you will have the rate that you locked it in at. And if it drops by, I think it's at least 1/4 of a point, your rate will drop also. So there's no risk on that one. The downside with the lock-in shop is that they're going to charge you 0.5 point for this protection. So if interest rates are say 6.5% and you do a lock-in shop, your rate's going to be 7. Now, if they go up to 7.5 or 8, then great, you were ahead of the game and you're hunky-dory. If they don't go up and, then it doesn't really help, because if they stay at 6.5, you're now paying 7, that doesn't help. We don't know what's going to happen with rates. We do think they're probably going to go up more this year. So chances are it would be a good bet. But again, something that you need to, weigh the risk and reward on that and figure out what's best for your situation. That's what I've got for you today. I hope it was helpful. Comment below. Let me know if you have questions about any of these, or if you've seen any other options out there that maybe I just haven't heard about yet. But hopefully this helps in your journey to buy a home. If I can help in any other way, please don't hesitate to send me a DM and give this video a like if it was at all helpful, and then watch my next video.